Hi, I'm Joey Blanco from RWB Realty Group, and if you've been watching the housing market, something's just changed, and most people don't even realize it yet. We're seeing massive price cuts, slowing home prices, and a global situation that's quietly pushing markets in a completely different direction. Now, this is not a crash, but it's a shift, and if you're buying or selling in 2026, you need to understand this. So let's start with what's getting to the headlines. Price cuts are exploding across the country. In some markets, nearly 1 out of every 5 homes has a price reduction. Let's think about that for a minute. That means that sellers are putting the homes on the market and then having to drop the price just to get attention. And this isn't random. The biggest price cuts are happening in places like Texas, Florida, and Arizona. The same markets that boomed during COVID. Remember when people were bidding $50,000 over asking sight unseen? So that market is gone. Now sellers are learning something the hard way. You cannot price based on what your neighbor sold for last year. Here's the deeper reason behind price cuts. The market is slowing. Now, it's not crashing, it's slowing. Home prices are still technically going up, but barely. We're seeing price growth dropping to around 1 to 2% year over year. And some areas are already seeing monthly declines. Translation in real life, instead of homes going up $20,000 to $30,000 per year, now they may only go up $5,000, or in some cases, not at all. This is where people get confused. They hear prices are still rising, but they feel like my house isn't worth what I thought it was worth anymore. And both can be true. Now, here's the part almost nobody's talking about. The shift isn't just about real estate. It's being driven by something much bigger, and that is global economic pressure. Right now, oil prices are rising, inflation is being stubborn, and mortgage rates are reacting to all of it. And here's how that trickles down to you. Higher global tension leads to higher inflation. Higher inflation leads to higher interest rates. Higher interest rates lead to fewer buyers, and when buyers disappear, sellers have to cut prices. So when someone says, "Why are home prices dropping in my area?" the answer might actually be because something's happening on the other side of the world. Now, let's talk about buyers because this is where it really gets interesting. Even though prices are softening, affordability is actually getting worse again. Why? Well, it's simple. Mortgage rates. Even a small increase in rates can destroy buying power. At 6%, you could afford one price point, but at 6.5%, you lose tens of thousands of dollars in buying power. So, buyers are stuck in a weird position where prices are dropping, but they still can't afford the house. And that's exactly why the market feels stuck right now. So, what does all of this actually mean? Here's the reality. For sellers, you need to price correctly from day one because the test the market high strategy is starting to fail. For buyers, you may have more negotiating power, but rates are your biggest enemy right now. And for everyone, this is not 2021. This is not a crash. This is a transition market. If you're thinking about buying or selling, this is one of the most important markets to understand in the past 5 years. And what happens next is going to depend heavily on interest rates, inflation, and more importantly, global events. So if you like, I can break down exactly what this means for Oklahoma City specifically and where the opportunities are right now. Just let me know in the comments and I'll get back to you. Once again, I'm Joey Blanco from RWB Realty Group, and I hope this information was helpful to you. If you would, please like and subscribe and reach out to me for anything real estate. Thank you. Have a great day.